How's it going, everyone? It is Monday. I'm going to say February, Monday, March 11th, 2024, and this is the video for today. So let's start with our longer term market bias. We are still bullish on all fronts, and we're aware of what are the things that can change that. We're keeping an eye on the inflation data, although it hasn't changed the market trend for the past couple of months. But I think it's an important point just to keep watching. We also have the FOMC statement coming up later this month on the 21st, I believe. Let me check my notes on that date. On the 20th, Wednesday. So yes, not this week, but next week, Wednesday. So that will be important on just the path of the future rate cuts. The market has priced in a rate pause for that at a very high level, about 95 plus percent, 97%. So the outcome of that meeting is not as important as what we expect the rate cut path to be. Then after that, there's nothing major until Q1 earnings happening in April, the mega cap tech earnings, and now NVIDIA also creates an extra event later. Instead of February, it'll be in March for NVIDIA. So the nature of the market has changed in that regard. But longer term fundamental, longer term technical is bullish. Now, if we go to a shorter term technical time frame, we see that after kind of this move up, it's been a little bit loose, and we've had some volatility, a lot more volatility in the market than we had over here. So we start to get these drops, and then we had these strong responses after the drops. Here we'll be getting drop, big response, drop, and we might see another response to a new high. But we are noticing that some volatility is increasing on both sides, and there are a few more nicer shorts that are coming up on our radars. So it doesn't change my longer term bias, but it does say that, hey, if you have very, very weak stocks on these strong bearish days, they will have some follow through. And you can probably do a day trade or even an overnight swing on a put debit spread to get some money on those positions. So shorter term, I am mildly bearish to neutral because we've had a lot of the drop that gains traction already. And I'm going to zoom into a smaller chart here. I'm actually going to zoom into the M5 chart because that'll tell the story of what's happening in this drop. So yesterday, yesterday on Friday, with this nice move up, it was looking really great here. And I felt that this 11 o'clock was the key bar that changed the entire context of the day. If we had a nice green bar here, a nice bullish flag, a 1OP cross, and an LRSI cross up, that would be an excellent entry point for longs, and we could feel confident that we could take some day trade longs higher. Instead, we got this crackdown, would put us on our heels, didn't take any trades yet, had some follow through selling, smack down, and we ended with this nice bearish hammer on a very, very strong bearish 1OP cycle. So if you're a pro, you could day trade some shorts. On this level right here, we see I wait a little bit of a bounce, and we moved up higher, tall bounce, then moved up lower. So we had some strong selling, but the move wasn't insanely strong. It wasn't like we were stacking reds, tiny little bounce, stacking reds. There was some fighting at some levels. We had a tall bounce at that level. So sellers were in control, but they didn't have as much control. So we're watching for signs for buyers to wrestle control from them. Today, we had a small gap down below the priority low. We had an initial move to the downside, flush up to we had a move back up to the upside, which I didn't think was as strong. I like the price action on the downside a little more. I thought it was more convincing, but I do know that we are in a longer term uptrend. So I took some profits on my overnight shorts around this time, around by this 1140 candle I was out, because we are holding this level, and now we're keep testing the high of the day and poking through. And now buyers have some weak amount of control, but the selling pressure has stopped for right now. So I wouldn't get crazy on any big short-term swing positions, but I would be looking for stocks that have been holding up very, very well. So we're going to go into the picks from the last video, which was a snow PDS overnight. I was in shares of Snow, but you should have been able to take some profits this morning. That is not the right chart. So Snow had some excellent weakness over here, started to not move as much on the downside, but if you took, let's say, a 6250, 160 PCS, Snow is forming a lot of tails over here, is unable to break through, and I took profits on Snow on 1140 over there. So Snow was a nice win overnight. Let's check some of the other positions in our picks, which are taking a little bit of heat. So first we have our put credit spreads, which is in T-Mobile. That's the 6250, which is holding up pretty well. T-Mobile got sucked back in the range, but we are above our level here on the spread expiring this week. So with any sort of market move higher, any sort of push up to 166, even testing the end of their range, I feel pretty confident that we'll be able to take the full credit in this position. Snow, we just saw, we can remove that. Our MSPCS is, on the other hand, it's not doing as well. I don't think it's one of my best picks. It got sucked back into the range here, couldn't hold the breakout, and had a pretty strong rejection off this high at this $91 level. I don't believe it'll be bearish, but because our strike is over here and both are in the money, we need this stock to pop back up in the next 2 weeks. So perhaps the FOMC statement can do that. I'm willing to hold it until expiration, until it proves me otherwise. The other scenario that would actually be a little bit better is if MS cracks all this support here to the downside, at 83. I could then ride the long puts and close the short puts for a profit, but I don't see that happening. To me, right now, the most likely scenario for this stock is a loss, given that we can't go in the range. But we're going to hold it because we have a strong market in our favor. We have some upside potential on some news events, and we still have time for this spread to play out. So we're going to hold MS in that regard. Netflix has had a nice breakout. We bought it on this breakout, and then it had pulled back. So we knew it was going to pull back, take some heat. It looks like for a stock like this with these deeper pullbacks, an LRSI entry point is a lot better. So that was something that we can learn from in the future. But we're not worried about this position. It's holding the $600 level very well. Not the strongest stock, but today it didn't gap down with the market. It held its own. Just really working off a lot of supply, in my opinion. And I believe we'll have another chance to attack this level in the next coming days. If we start to dilly-dally at the level and can't break higher, then we have to take smaller profits, a scratch, or even a small loss in that area because the stock did not have the strength that we expected. So Netflix is still technically good, but we're keeping an eye on that. Same thing with IBM. We had a nice breakout here. It's testing this level of the breakout. So far, it is holding its own, but has a little bit of weakness that we don't like to see. Decent rejection from this level over here. So we know that it makes a move down, and we'll have another chance to test this level on the upside and take a smaller loss or even a scratch on a double top. But I like this breakout on IBM, and I'm willing to hold it through the pullback because it had a lot of strength and digested some of the gains. We have lots of buyers supporting at this level here, and I just don't think that they are going to go away. There just seems to be a good amount of profit taking around this level. So keeping an eye on IBM, but also nothing I am worried about. Now, ASML had a bearish engulf. So what I said in the video last time was that we had a half position where we take a day trade here. We're willing to hold it overnight, but we got the bearish engulfing candle on the 8th, so we would have to take the loss on ASML on a half position. So we take a half loss there. Today, still falling down. I think semis are not very strong, but this is also a very longer term, pretty strong uptrend. And I believe that we'll have another chance to exit this position on a move up. So what I'm going to do for ASML is hold us until it gets a nice double top higher and then exit the position at that time. We have some time before earnings, so I'm willing to give it a little bit of wiggle room. It's also, I mean, it's moved up, but this move has not gone absolutely parabolic, in my opinion. It's sort of had this wider drift up, so I don't feel as worried about this bearish engulfing candle as something on a stock like MSTR. Whoops, where if I got a bearish engulfing candle, then I would have to be out of the position. So let's load this chart here. I took a 1 share swing, and this is just something I'm trying to work on these parabolic stocks, just trying to get a nice entry on these and practice riding up higher on stronger price action and getting my confidence up. So I have I entered here at about 1612 is when I got in. Stock has moved up higher, compressing. So I'm just going to wait until I get this bearish engulfing candle, and then I'm going to be out of the position. So I'm going to talk through another example that I did with NVIDIA. So I got in here on the 6th. It wasn't the best entry, so I wasn't willing to let it go past my stop. Nice day on the 7th, and you see on the 8th we had a nice leg higher and then stacked red candles all the way to the downside. Now, poked my stop a little bit, and it exited on this tiny bounce at 1140 for a $20 profit. So, not insane, but also not the worst. I was able to get some pretty decent profits on a late position rather than being jumped out of the trade. Now, this has a bit more of a 45-degree chart, but this is a pretty significant bearish hammer, really, really heavy volume. So I'd wait for a nice little bull flag, maybe a compression breakout, and then we can get into that position. So for a stock like NVIDIA, I'm going to set a alert for an LRSI H1 above 20. When we get that, then we might have we can start to see the stock get ready and see what we want to do. So I'm still going to be holding all of these. We have a couple of wins, and some of them are taking some heat, but I'm trusting my picks here, and I haven't seen any technical breakdown, so I'm willing to give it some wiggle room. What trades do we like today? So I mentioned MSTR. I'll briefly bring up mRNA. It had a nice breakout. It's pretty close to this resistance level, so we got to be careful. Sprung up over here, and I set an alert because it pulled back to VWAP and was compressing. We had a chance of a breakout here and was immediately smacked down. So that still tells us that sellers are in control. Buyers may have to soak up some more supply. So if it does break through, I think it'd be a pretty nice CDS. I would take the 113, 115 CDS and target that strike. If you get that on today, you might be able to hold it until tomorrow. Maybe try to get 20% on that. Maybe 15 to 25% you could probably get. Another stock I really liked was Garmin. So Pete mentioned Garmin in another video. This stock has been grinding higher. Really nice breakout today. I tried to get in around here, but I couldn't get the entry point that I wanted to. And I'm not too worried about missing this move. After it makes a big move, Garmin will come back and it will test this level, right? Big move, test the level, big move, test the level. So it's a little bit more explosive than it was in here. And I don't think the stock is going to get too ahead of itself. So I have my order for the stock. I'm going to see if it comes back and test the level. And if it does, then I will get a good fill. But I'm not going to chase a grinder stock up like that. I'm okay with missing this move. Another nice grinder stock is Ball. So the price action a little bit looser than Garmin, but still a pretty nice channel. Pulls back a little bit, moves up, compresses, move up, comes up here, got a little ahead of itself, comes back down again. Consumer cyclicals are looking pretty steady. There's some money flowing in here. And I like the nice steady price action of Ball. It's a packaging company. It's not really doing anything crazy, so it looks like institutions are slowly allocating over there. BA was a good breakout, but we're always hesitant on BA. It doesn't really follow the technicals as well. Another consumer staples that are doing pretty well today is Walmart. It had a nice grind up higher. Some earnings volatility. Managed to break through here and got rejected. So if we're able to close above this level and start to inch up higher, I think it could be also a very nice longer term swing for a nice grinder stock. You could probably take the a May call and just hold that position over time as it appreciates. So those are some couple of long calls that I'm eyeing. If I had to pick a stock to trade, it would probably be this Garmin D1 chart. And I know that Pete picked this video, but I want to outline, or Pete had mentioned this trade in a couple earlier videos, but I want to outline how I would specifically trade it. So we know that it's a nice grinder up. When it gets too ahead of itself, it's going to pull back. So if I don't get my price today, I'm not going to do too much. If I wanted to trade this, I'm going to take either the April 19th or the well, the June 21st call is pretty far out, but I would probably take either of those two calls because the next earnings date is on 4/30th. It's making a pretty nice move today. But we know the market is long term, very, very bullish. We know this stock has a nice grind higher, strong earnings reaction, held the gap and started to climb higher. So we have an excellent D1 chart. I would probably take the April 19th 135 puts. These were trading at about a 0.75 delta. It's probably higher now. When I saw them earlier in the day, they were like 950-ish. So they've done pretty well today. It's an excellent longer term swing. And my initial target was something like 150. And just basing off this move here, we had a close somewhere around 115 and we rode it all the way up to a high of 130 before it had to digest some gains. And then we had an earnings pop. This took This happened over the course of maybe 6-7 weeks. So here, it's already been about 3 weeks. We've gone up about $10. So that's kind of my thinking. So that's a sort of a rough profit target I have in mind. I would also use this AVWAP-E as a stop, kind of around this 138 level. I believe by the time the stock moves up, AVWAP-E will also crawl up. So this 138, 137 level is where I would be looking to get out of the trade if I was wrong. And my plan would be to ride it up until I see some compression over here. And then this LRSI, kind of this HA reversal and this LRSI cross. I think this is a nice combination on very tight price action stocks because we don't get a lot of volatility. And LRSR is glued to the ceiling, comes back down, and this early breakout is a nice sign to exit the position. Now, it is a little bit sooner, in my opinion, but if you look at this double top that comes up here, you have 3 weeks where it's kind of down on you a little bit, comes back up, and if you look at just this high, right, this high of 127.73, so about 128, and this low is 126. So it's kind of a $2 difference if you look between the worst time and the absolute best time you can sell. It's more likely that you'd probably sell somewhere like at 127-ish versus a low of 126. So in my opinion, the $1 you might get on a great entry exit later isn't worth the time that you have to hold it through the drawdown. So I feel that a move like this is pretty telling on a stock, and that's where I would personally take the profits on the position. So that would be my trade, a longer term swing on Garmin. So if I had to highlight some of the puts here, I'm just going to look at or sorry, not the puts, some of the calls. Let's go to the 621 calls. Yeah, I mean, I would take I would take the 135 calls, the 419, 135 calls on a pullback and ride that out for the next 5 weeks. And I'd wait for a pullback. Don't chase today. It's going to come down. Let's look at an H1 chart here. All right, the move is definitely accelerating over here. We have a strong move, and look, it pulls back halfway, test this level, move up, test level, move up, test level, move up, test level. So I know that we're going to get some tests somewhere here, right? Maybe like 144, maybe 143. So I can get a decent entry price. So I'm going to wait for, and I'm going to set a nice alert here. I'm going to create a LRSI M15 alert. So a little bit more noisy. But if we look at this M15 alert chart here, it gets us in a pretty nice position a lot of the times. You can see that we get this pullback over here, 142, another move up here. So it seems to kind of nail in a lot of nice entries on these pullbacks. So that's what I'm going to wait for over here. And that is going to be our long swing for this week. So let's going to add that to our YouTube picks. And that is the criteria that I outlined. As I'm trying to improve my trading. I'm trying to get better at finding these grinder stocks, at trading some parabolic stocks. I'm also working on trading debit spreads, call debit spreads, and put debit spreads on shorter term time frames. So the picks that I might suggest will be different from what I've done in the last 2 months, which have been really nice. These shorter term swings on deep in the money calls have been great, but I want to be expanding my toolkit because there might be some situations in the market where I can't really do these longer term in the money calls. Maybe the risk reward profile doesn't justify what I'm seeing in the market or in the stock, and I might have to rely on other options. Conversely, when we looked at our February picks and we looked at what was missing from those, right? If you look at something like JPM or ANF, we missed a large chunk of the move because we didn't kind of take into account the stock chart that we were trading. JPM is an excellent example, right? We got this breakout on the 15th, beautiful breakout. It's a strong chart, and we could really trade this until the next earnings date, which is April, right? So we could hold the stock and just trade it until April. The stock's gone up $10. So we took profits, I believe somewhere here on maybe 185. So we got a really nice move on this trade. Happy with the trade, but if we held a lot longer, given that we had the confidence to do so on this chart, we could do a lot better. So that's also what I'm looking at here. How can I get better? I mean, let's just look at ANF. And I would hold this until earnings because earnings can have some material news impact. Like you can see how ANF, great chart before earnings, got a little ahead of itself, and now had some pretty strong selling to the upside. So, but if you got it at this earnings date, right, we have a strong chart, some steady price action, get it on this breakout here, right? Add it on $76, and you're just holding this. You're just holding this, test this range, we're moving up higher, moving up higher, moving up higher, and just hold it all the way until earnings. And 140. I mean, you have a 100% gain in that stock from earnings date to earnings date. Not all stocks are going to do that, but there was no reason really to exit the trade because it was so consistent. And if you were unsure, right, you would definitely had chance to exit on a double top lower high, which never really gave you that opportunity. And I mean, even if you were somehow to hold this, after earnings, I still believe you're going to get a double top lower high here because this price action is so strong. This is a significant retracement, and if you are long here, you would be looking to get out of the trade on this next leg higher. And I think you could probably get out somewhere like 130, 135, depending on how high or deep it goes. But I'm going to bring up another example here just to really drive the point home. Cost was an excellent chart, and we traded that early in January, right? I called this this AVWAP breakout over here at 658. Hold it all the way until earnings. You get it at 785. So that's a $130 move in a $650 stock. That's almost a 20% move in the stock. You could do very, very well for yourself holding these nice tight grinders. So I'm making a list of these both parabolic charts and 45-degree charts, so I can get excellent entry points and also look at how I can trade these better. And if I'm unsure, I'm really trying to focus on trading with one share with some of these because this is a new skill. Maybe trade 10, 20, 30 of these to get some confidence in how to hold them, and also practice adding to these the whole time. If I do a one deep in the money one contract that's the size too high for me to really practice adding and sticking to winners, I am more confident and more comfortable doing shorter term swings with those kind of trades. So I'm still going to do those, but I also, again, need to work on these new, I'll work on ways to get my tradings better. So with all that being said, Garmin is our long pick. We are planning to hold that all the way until 419. We haven't entered the trade yet. We are going to wait for this LRSI pullback on the stock. And when we get that, we will get in the pick. So that is our pick for this video. Thanks everyone for watching, and I will catch you all in the next video.